Hi, this is Darren from Macquarie Warrants Singapore and welcome to another episode of Macquarie Warrants Market View. In this series, hear firsthand from Singapore's investment strategists as they share their views on markets in the coming weeks. For this episode, we have Kon, Director of Waypedia and SGX Academy trainer, who will share his views on the Singapore and global markets for this month.
During the last video, we discussed about the quarterly chart of S&P 500. We see a bearish engulfing body, and we believe for the rest of the year it will be challenging, and unlikely it will retest the recent all-time high in January. We also discuss about any intermittent rebound. Any long position should be short-term because of our view in the quarterly chart. This is what we see in the last week of March, a bullish engulfing body in S&P 500 index, the weekly chart. And then market rebounded 31% higher from its recent all-time low. Looking across all other indices, we spotted a laggard. In this Hang Seng weekly chart, we could see a hammer that is higher in its weighting. And again, what do I mean by that? If you notice that weekly range, it is wider or stretchier than the rest of the periods. And comparing to S&P that has already recovered 31%. But Hang Seng to date has only recovered 14%. And again, this potential reversal up signal, we are trading against the trend. Therefore, any long position, we have to position it as short term. For the local stock, we are starting into the OCBC weekly chart. And towards the last week of March, we could clearly see a bullish engulfing body. And this reversal up signal, it is not an ordinary one. Its range is wider and stretchier from its norm. Therefore, I classified this reversal up signal that has a higher in weighting. Its all-time high in 2018 was at $14, and its recent low during the end of March was a drop of 44%. Therefore, there is a likelihood for a rebound. But do take note, I'm saying this as a retracement than a major turnaround. Have a profitable weeks ahead and always have a measured risk.
I hope Kon's insights have provided you with actionable strategies to trade the current market. Investors keen to trade the Hang Seng Index in the short term may consider doing so via HSI warrants. Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move inversely from the underlying and will increase in price when the underlying stock or index falls. In the last week of April, the HSI May futures finished at its highest level since 11 March after gaining 2.8% during the week. On the back of this move, the trending HSI call was up 38% and the put was down 31%, both more than 10 times the move in the HSI. This magnified price move seen in HSI warrants is due to the gearing effect. It is also important to note that the market making hours of HSI warrants are from 9:15 AM to 4:28 PM, 2 minutes before the HSI futures close. Warrants move according to their effective gearing figure. If a warrant had an effective gearing of 10, it means the warrant will move about 10% for every 1% move in the underlying share or index it tracks. The gearing figure is one of the reasons that make warrants popular, but note that gearing can work both ways, meaning warrants will also move a bigger magnitude or percentage change than the percentage move in the underlying should you get your view wrong. In Kon's view on OCBC, we see signs of a stock price retracement mentioned earlier, as the stock price rebounded off its 3-year lows to record a 4.5% gain last week. Investors keen to position themselves in a short-term price move in OCBC can consider doing so using warrants. If you were bullish and felt that OCBC would rebound further in the short term, you can buy a call warrant. The call warrant shown here has an effective gearing of 4 times, meaning if OCBC gained 1% in the next week, this warrant will gain around 4 times more. If you're bearish and felt that OCBC would hit lower in the short term, you can buy a put warrant. This put warrant will increase in price should OCBC fall. So why do people trade structured warrants? Listed on the SGX, structured warrants are issued by third-party financial institutions or banks like Macquarie Bank and can be traded via a standard brokerage account. Besides, they are designated market makers for all SGX listed structured warrants. Macquarie Capital Securities act as the market maker for warrants issued by Macquarie Bank to provide continuous and consistent buy-sell prices for warrants in the market. We offer tight spreads and liquidity on Macquarie Warrants to make it easy for investors to enter and exit the market. I hope you enjoyed today's episode of Market View. Investors who are specified investment products qualified can trade warrants via their online trading account, the same way they would trade shares. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.